check in with Chief Market Strategist with TD Ameritrade, J.J. Kinahan. J.J., welcome back to Big 550 KTRS.
Thanks for having me, McGraw. How are you today?
Good. Amazon's down 5%. Was it really Donald Trump's tweet that sent Amazon tumbling?
Well, I think there's a few things. It wasn't just the president who's after Amazon right now. This has picked up a lot of momentum, actually, over the last 48 hours because there's a lot of states that would like to get more of that tax revenue also. So this is a story that isn't going to go away, especially as we head to midterm elections, and many states want money for their budgets. And the other thing about Amazon and about the market overall, we had this big move yesterday. This was more of, we're going through a reevaluation of where these stocks are actually priced right now. And so I would expect this sort of volatility to continue for the next month or so as we kind of decide, hey, listen, after this amazing run in 2017, with the market conditions now around the world, are these stocks still worth as much as we had them worth then?
Seems like they're sort of, as you're saying, they're sort of disconnected from the numbers, right? Warren Buffett says, look at the numbers. It seems like a lot of these people have bid up these stocks regardless of what their numbers are.
Yeah, and you know, they're called momentum stocks for a reason. You know, they get some momentum behind them, particularly the FANG stocks, and they're tough to stop. Well, that momentum works both ways, and I think sometimes people forget that. So the momentum sort of stopped and turned here a little bit, and now you have to come to some sort of fair pricing. But that just doesn't happen overnight. And I think one other point that's lost on people sometimes is that 2017 was the anomaly. 2018, we've returned to more normal volatility levels. But the bigger difference is you're talking about, you know, an S&P 500 that's at 2,600. So normal levels here, what it really means is that 200, 300-point moves in the Dow is going to be more of the norm, in my opinion, over the next month than the exception.
A lot of people talk about farming community and some of the manufacturing jobs that are going to be hit by a trade war. But I heard the other day that tech companies and the semiconductors and the different parts that are being put together in China, they could suffer from a trade war as well.
Absolutely. You know, it's starting with steel. It looks like it's going to start with like steel, fruit, and wine. But, you know, if this thing really starts to escalate, hopefully it doesn't, because one thing trade wars have proven in the past is that everybody tends to be a loser in the end. But we could see it go to the chip makers, as you just make it very difficult to import anything, and technology being one of the primary things that the U.S. does export. And our the chip makers have done incredibly well. The power they give, you know, I think sometimes people forget how big gaming is around the world, and chip makers have really done a great job of having their product be used well in games. And it's funny to see that laptop computers are still selling pretty well because gamers want to use them.
Yeah. JJ, what are you looking for as we go further?
I would look for a little bit of increased volatility, or I would say not a little bit. I would say this volatility will stay at this level or a little higher for the next month or so. We're coming into earnings season, McGraw, and that may start to provide some stability for the market, because then we get to hear from the CEOs about their expectations for the rest of the year, how they see potential tariffs affecting them, et cetera. And I think that's what we actually need, is a little bit more of a calming voice in the market, because for the next 2 weeks, we have the employment numbers Friday, but there's nothing that's really going to calm the market down. And I think hearing from the CEOs at earnings times usually does a good job.
What about the tax credits or the tax cuts to the businesses? That was supposed to hypercharge the economy and put money in the pockets of all the individuals and spend, and everything was rosy for as long as the eye could see.
Well, I think actually it has had the effect of helping the consumer do well. If you look at sales, consumers still out there spending money. And actually what it's done, you know, you hear over the weekend about Walmart talking to Humana. I think what it's done is it's actually encouraged businesses to look for other revenue sources within what they do. I don't think you would have seen that sort of combination even talking a year ago. You know, you do have a lot of M&A activity taking place as businesses try to become more efficient, because they now have a little bit more money to spend with the tax credit. So from that point of view, I would say it's actually achieving its primary goal.
J.J. Kinahan, Chief Market Strategist with TD Ameritrade. J.J., thanks for checking in.
All right. Have a great day. Thanks.